Good morning, everybody. Happy Inflation Day. Good morning, everybody, and happy CPI Day. The Consumer Price Index for the month of June will be released in just 5 short minutes from the Bureau of Labor Statistics. It's time to find out just how big of a dent the Federal Reserve has made in their fight against inflation. And all it has cost us is sending the economy into a spiraling recession. A recession that a lot of economists seem intent on denying that it's even here or that it's coming, but that's another topic for another day. For now, let's talk all about inflation. The market is expecting a headline number of 3.1% year-over-year inflation. They're also expecting a month-over-month change of 0.3%. That's the headline number that's going to get all the press. The market is expecting core inflation, which strips out food and energy, to come in at 5.0% year-over-year or 0.3% month-over-month. You may realize that gasoline, oil, natural gas prices all way down from a year ago. So core inflation is what the Fed is watching more closely right now. That has been coming down. Both inflation readings have been coming down. They've been coming down pretty fast. Question is, will they continue dropping? My gut tells me they will, mainly because of things like energy, because of things like food, but also things like the rent are starting to get cheaper across the economy, although that hasn't really showed up in the owner's equivalent rent statistic in the CPI just yet. A couple other things to keep a watch on is used car prices have fallen substantially, and also transportation services, because that's one of the categories that the Fed has been very nervous about. Remember, Jerome Powell told us a few months ago he wanted to see core non-housing services come down. Well, transportation services is the largest number in that category. That one has been stubbornly high, so we'll keep an eye on that one before it goes out. But the other thing I want to talk about is I have to thank Patriot Gold Group for sponsoring this live stream before the number hits. Guys, we're talking about inflation. We're talking about money going down in value, and whether it's inflation or the recessionary death spirals of deflation, no matter what is going on, no matter what central banks are doing to the value of our currency and moving our lives around on a board like pawns, it's very important to protect your wealth from what they're doing. And the best way to do so is with the ownership of physical precious metals like gold and silver. And that's why I am happy to represent the Patriot Gold Group. But I am not just a spokesperson. I am also the client with Patriot Gold Group. I just bought some gold and silver from them last week, and I am looking forward to that. So go to nsfgold.com. There's a link in the description down below, or call 888-988-5401. Get your free investor guide today, and as always, tell them that nobody sent you. All right, it is 8:28. We are 2 minutes removed from what is to come from CPI. Let's shrink my big melon of a head and see what's going on. What we're looking at here, for those of you following at home, this is bls.gov/CPI. This is the Bureau of Labor Statistics website. And down here in the bottom left, it's still showing the May number from last month, but this is where it's going to be posted in a few moments. So we are waiting for that. Now, I talked about a couple things I wanted to keep an eye on. We've got about a minute here. 2 things real quick. This is the Manheim Used Vehicle Value Index. This is why I'm saying keep an eye on the used car number. I expect a big negative print for used car prices. Now, this is wholesale prices. This is what used car dealerships are paying for their used cars, but this thing is coming down big versus a year ago. So keep an eye on used car prices, and also keep an eye on the rent. Now, this chart right here is showing in white what the Zillow asking rents have done over the last couple of years, and this chart in yellow is showing what CPI's owner's equivalent rent has done over the last few years. Now, the scales are a little different here, but you can see the asking rents have started to come down, or I'm sorry, this is year-over-year growth in asking rents. So the asking rents have not gone up nearly as fast as they were going up a year ago. Well, now it's still showing in owner's equivalent rent that they're rising faster than ever. So there is a divergence between what is actually going on in the rental market and what CPI has been telling us. Now, it is 8:30, so it's time to start refreshing, and let's see. Right now, they're still showing May. So again, the expectations are for 3.1% headline year over year and 0.3% month over month. I'm still showing the May number here. Here we go. CPI for all items rises 0.2% in June. That's your month over month number, and 3.0% year over year. So I'm going to go ahead and call that a beat for CPI. It came in lower than expectations. The consumer price index for all urban consumers rose 0.2% in June on a seasonally adjusted basis after increasing 0.1% in May. The U.S. Bureau of Labor Statistics reported today over the last 12 months, the all items index increased 3% before seasonal adjustment. The index for shelter, that is the owner's equivalent rent, was the largest contributor to the monthly all items increase, accounting for over 70% of the increase, with the index for motor vehicle insurance also contributing. The food index increased 0.1% in June after 0.2% the previous month. The index for food at home was unchanged over the month, while the index for food away from home, i.e. restaurants, that rose 0.4% in June. The energy index rose 0.6% in June as the major energy component indexes were mixed. So this is a big beat for CPI. Inflation dropped an entire full percent in the last month. It was 4.0% back in May. Now it is 3.0%. So CPI coming down fast here. Now let's see what we've got. 3.0, there's your headline number here, your year over year, and then 0.2% for your month over month number. We've got 5.7% year over year for food at home, 4.7 for food. I'm sorry, 5.7% for the food index overall, 4.7 for food at home, 7.7 for food away from home. The energy index, we still got a big negative print in the year over year number for the energy index. That's negative 16.7, but I would add that we actually got a positive number in the month over month. So June of 23 was 16.7% cheaper than June of 22, but June of 23 was 0.6% more expensive than May of 23. See, in May of 23, we had a negative 3.6% print, but now we're back into positive territory. So energy prices still pretty volatile, but still down massively versus a year ago. You may recall June of 2022, that was the highest reading in over 40 years. That's when we had that 9.1% CPI headline. Prices have risen even further since then, but the rate that they're rising has come down substantially. All right, let's look at else. What else do we have here? We've got core inflation, all items, less food and energy. Whoa, that's big. We got a nice beat on core inflation as well. 4.8% year over year for core inflation. That is a 0.2 of a point beat. The market was expecting 5.0. So this is lower than expected. We also got a 0.2% month over month for core inflation. That beats by 0.1 of a point. Market was expecting 0.3. So that is a good number. What else do we have? Commodities, less food and energy commodities, 1.3%. New vehicles, still in positive territory at 4.1%, but unchanged for the month at 0.0. Used cars and trucks, there we go, negative 5.2% for used cars and trucks. It's a big negative number, and even month over month, a negative 0.5%. So it's a beat in used cars. We've got apparel is at up 3.1% year over year, 0.3 month over month. Medical care commodities, 4.2%. Services, less energy services. So that's a big one here. These are your core non-housing services. We got 6.2% and 0.3 month over month. Now that is down from the previous month. The shelter index is showing 7.8. Now that's important, 7.8% for shelter, because it was showing 8.0% last month. Now I've been saying that the owner's equivalent rent in the shelter index keeps rising, keeps going up, even though a lot of the rental websites, the real estate websites are showing rents have leveled off and we're starting to come down. Well, finally, owner's equivalent rent has stopped going up so fast. It's still going up, but it's going up slower. We had a 0.4% month over month number for the shelter index versus a 0.6% from the prior month, but this is still a pretty high number here. Transportation services at 8.2%. That's down from 10% last month, so Jerome Powell is going to like to see that one. That's that core non-housing services coming down. I shouldn't say coming down. It's disinflation. Inflation is slower. They're still going up, but they're going up slower. When you hear inflation going down, that doesn't mean prices going down. That means prices going up slowly. That's an important distinction. I get a lot of grief in the comments over that. It's easy to get your words a little mixed up here, but again, when you hear coming down, unless you see a negative number, that doesn't mean the price is coming down. It just means it's going up slower. But the transportation services, look at this. It went from 0.8% a month ago to 0.1% this month. So we're seeing those core non-housing services are coming down. And even medical care's got a negative number. Healthcare apparently got 0.8% cheaper over the last year with the index unchanged for the month. So this is a beat. Any way you look at it, guys, the market should be liking this report. Let's take a quick look at what the futures are doing right now. And yes, the market is liking it. S&P futures, big green candle up right now, up 31 basis points ahead of the open. The Dow is also liking it, up almost 200 points ahead of the open, or a 0.57%. And the NASDAQ tech futures up 150 points, or a full 1%. So markets are loving this, guys. We are apparently going to get a nice boost off of this inflation beat. And again, this is a beat any which way you look at it. Markets are just loving these lower inflation prints. But I must warn you, yes, inflation is coming down, but inflation is coming down so fast that I don't think it's going to stop. I think it's going to keep coming down, and I think eventually it's going to go negative. And that means earnings contractions for S&P 500 companies. And right now, these stocks in the S&P 500 and the NASDAQ, their multiples, the amount people are paying for them relative to their earnings is exploding higher. If those earnings start falling, and I expect that they will, stocks are going to reverse very violently. Deflation is not good for asset prices, folks. And I do think deflation is coming. We're already seeing it in certain categories. I got a couple people I got to say thank yous to right now. I got my man Mike Binder, who says, let's see if we start nuking today. Depends on what you mean by nuke, Mike. Because I don't think, well, if you meant big red candles, no, we're definitely not nuking right now. I guess we're closer to mooning than anything. I hate to use that language. But stocks are loving this right now. I think this is going to be short-lived, guys, because earnings season starts up on Friday, and we're going to lead with the bank earnings. I think we're going to see some massive revisions down to these full-year estimates. So, again, enjoy this one. Bulls, looks like lower inflation means higher stocks for the time being. I don't think it's going to last. Thanks again, Mike. I appreciate the super chat, sir. And thank you to Eric Orlowski, who doesn't have anything to say, just giving a super chat and being a swell guy. Thank you, Eric. I really appreciate that, sir, very much. And thank you to the inflation situation, who says, Jack, thanks for all the hard work. CME Fed Watch still showing 90% chance of a 25 bip hike in July. Have you been watching the short end of the yield curve? Yeah, guys, short end higher, long end, well, everything's higher. But keep an eye on the short end and keep an eye on the reverse repo, TIS, because right now money is flooding out of the reverse repos. That's the reserve liquidity in the banking system that's being parked in the Fed, and it's chasing those extra 20, 25 basis points or so in the bond market now that the debt ceiling is behind us. So yes, the short-term duration U.S. Treasury market is very important to keep an eye on. Also keep an eye on that all-important 10-year Treasury yield. All of them seem to be heading higher right now. The CME Fed Watch tool, what he's talking about, that is the likelihood of another rate hike from the Federal Reserve. And right now the CME group is still saying, let's refresh this. They're saying a 92.4% likelihood of a rate hike on the 26th. That's pretty much a done deal. But the big one to watch is the November number. And right now the market is saying only a 33% chance of a second rate hike come November. So keep an eye on that one. Right now the market is saying probably one more rate hike, maybe not another one. Thanks again, the inflation situation. I appreciate the super chat and the support of the channel. And thank you, Contrarian08, who says gold above 1940 and silver taking off. Bullish. You know, I didn't have that chart open. Let's take a look at what gold is doing right now. Gold is up $17 right now. And show me the chart. Give me a 1 day. I should have had this one up here. Right now, gold is where? Oh, yeah, look at that. Big gap up. The candle isn't even showing right now, but there it is all the way up here. Yep, gold is gapping up on this lower read. That's important. We'll see if that one lasts. Gold can be pretty volatile. The precious metals, we'll talk more about that on my regular live stream that is coming up in about 50 minutes here. But it is nice to see the shinies doing well. I like the shiny. I like gold. And, of course, I like my favorite of the shinies, silver. Thanks again, Contrarian08, sir. I appreciate the super chat and the support of the channel. Thank you guys, everybody, for watching. Again, if you are just joining late, the headline number was 3.0%. It is a beat for inflation. Markets are loving that right now. I'm going to be back at 9:30, guys, 9:30 Eastern time for the opening bell for my normal daily live stream. So I'll see you guys in about an hour. Thank you, everybody, for watching. Thank you to my Patreon supporters for everything you guys do for the channel. Link down below. Thank you to Patriot Gold for sponsoring this. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.